Hello guys, welcome to Accspedia. The topic that we are going to discuss today is setting off of input GST against output GST. First thing that you need to know is what is an input GST and what is an output GST. We buy goods. At the time of purchasing goods, we pay tax, that is GST, to our suppliers. Similarly, when we sell goods, we collect tax from our consumers, that is we collect GST from our consumers. These goods that we buy are the raw materials or the inputs of our finished products. So with these goods, that is with these raw materials, we manufacture goods. Let's take for example furniture. To manufacture furniture, we need wood, that is timber, plywood, and some other materials like that. So they are all called as inputs. So for the inputs, we pay GST, and that GST is called as input GST. And similarly, we sell goods. Those goods are called as output, that is the final finished products, furniture, and that outputs we also collect GST from our consumers, and they are output GST. This input GST is an expense for us. Actually, this is not our expense. This particular tax that we have paid, we can recover from the tax that we have collected. So this is not our expense. We no need to bear this, that is the company no need to bear this input GST. But when we record, let's assume this as an expense. We have paid, right? We have paid a tax. So let's assume this as an expense at the time of paying the GST. And this output GST is a liability. This is not our revenue. We cannot claim, we cannot enjoy this GST that we have collected. This is the GST that we have to deposit to the government. It is the revenue of the government. But the rule is that you can deposit the GST that you have collected after setting off your input GST. That is after recovering your expense from this particular output. Remaining output, if there is anything, that you can deposit to the government. So that is what this set off mean. GST is destination based tax, which means the final consumer has to bear this entire tax. So in between, wholesaler may pay some GST, retailer may pay, manufacturer may pay some GST. So all the GST will ultimately be transferred to the final consumer, who is the destination. The consumer has to bear that entire GST. So the GST that I have paid for the goods that the raw material that we have purchased for manufacturing the final output, we don't need to bear it, because we are not the consumer. We are not going to consume the product. So we just incur at the time of purchase, and we recover that particular expense that we have incurred from this output GST. So that is what the meaning of setting off of input GST against output GST. Hope that is clear. So let's move on to the rule regarding input GST and output GST. Before getting into the rule, you need to understand types of GST. For detailed explanation on categories of GST, I have made a separate video, the link of which you can find it in the description, or else you can also click this above I button. Now we briefly discuss what are the categories of GSTs. Because to understand the setting off of input GST against the output GST, you need to know the various categories of GST. The GST has been divided into two based on intrastate transaction and interstate transaction. Now, in previous video, we have discussed that under intrastate transaction, there are two accounts that the seller has to maintain, that is CGST, Central Goods and Services Tax, SGST or UTGST, State Goods and Services Tax, or Union Territory Goods and Services Tax. If the particular state government is a normal state government, then SGST account you have to use. If the particular government, local government is an union territory like Pondicherry, Delhi, then you have to use UTGST in the place of SGST. Okay, under interstate transaction, the GST inputs and GST outputs have to be recorded in two different accounts. That is, half of the GST is CGST and remaining half is SGST. For example, if it is 12%, 6% CGST, 6% SGST or UTGST. If it is an intrastate transaction, there is only one account involved, that is IGST, that is input IGST, output IGST, that is entire 12% has to be recorded in IGST account. Those who do not know the difference between these three, I kindly request you to watch the previous video. Let me now explain you the rules regarding the setting off of input GSTs against the output GST. Input GST is the tax that we have paid that can be recovered from the tax that we have collected, that is the output GST. Okay, now here we have, in case of intrastate, we will have two accounts for both inputs and outputs. Input CGST and output CGST, input SGST and output SGST. In case of interstate transaction, we will have only one account for both input and output, input IGST and output IGST. Now look at the rules. The first rule is that the input IGST has to be set off first. Against output IGST. If output IGST is more, no problem, entire output IGST will be utilized towards input IGST. If output IGST is not sufficient, then you can use output CGST or output SGST, or both CGST and SGST output can be utilized. So first thing is that this input IGST has to be set off, whether by using output IGST or output CGST or output SGST. This input has to be set off first. After that, you have to set off this input CGST against output CGST first. If output CGST is not sufficient, you can use output IGST if output IGST is having excess balance in it. But to set off input CGST, you cannot use output SGST. That is the rule. But to set off input IGST, you can use output IGST, you can use output CGST, you can also use output SGST. But for CGST, you have to use its output or IGST output. IGST is common for all. Then the third one at last, to set off that input SGST or UTGST, we have to use against output SGST. If output SGST is not sufficient, then we have to use output IGST if output IGST balance remains in the account. It may be a little bit confusing. I request you to watch once or twice, you will be able to get it, and I will also explain you with an example so that it will be easy for you to understand how to set off by applying these rules. Now look at this problem where we have input IGST 6,50,000, that is the IGST that we have paid for interstate transactions, and we have output IGST 5,25,000, that is the IGST that we have collected from interstate transactions. Now these two, that is CGST and SGSTs, are intrastate transactions. Input CGST is 3 lakh, that is the CGST that we have paid, and CGST that we have collected is 2 lakh. Here CGST paid is 3 lakh and CGST collected is also 2 lakh. Now how to set off this one? The rule very specifically says first the input IGST, that is this 6,50,000 has to be set off by using this output IGST then CGST, then SGST. All these three can be utilized, but the thing first, the output IGST has to be used. Now, how to solve this problem? First, draw columns like this. Write particulars first. Then write output IGST. In bracket you write how much output IGST is available. Output CGST, similarly output SGST. So by at last you write balance input, that is after all setting off using IGST outputs, even if some balance input is there, that balance has to be maintained in the input account. So input account are the taxes that we paid, that will remain in the account until it is set off, because that is not our expense, we no need to bear that expense, that will remain in the particular input account itself. So balance, write it here. So let's first set off input IGST, that is the first rule, right? Input IGST first to be set off against all the outputs. The first thing, take input IGST. How much input IGST is there? We have 6,50,000 input IGST is there, that you write in bracket here, 6,50,000. Now to set off this input IGST, first output IGST has to be utilized, but the thing is that output IGST is not sufficient. You will take it for input IGST. Okay, so entirely you have utilized. Then still how much balance is there out of 6,50,000? Now 5,75,000 has been set off by using output IGST. Still we need to set off 1,25,000, that you can either use output CGST or output SGST, or both can be utilized with half of the amount or some amount in any ratio. Let me take the entire balance input IGST from output CGST, that is balance 1,25,000. We are taking it from the CGST. So this input has been set off by using output IGST and output CGST. Output SGST we did not use, and there is no balance input in this particular account. It has been set off. See, 5,25,000 plus 1,25,000, total 6,50,000. So that particular input has been set off. Now let's find out the balance. How much balance is there after setting off of this particular input IGST? In output IGST there is no balance, entire 5,25,000 has been utilized. Then in output CGST, out of the 2 lakh output CGST, 1,25,000 has been utilized in setting off of that input IGST. So balance 75 is there. Then in output SGST, the entire 2 lakh is the balance. Now second thing is that let's set off that input CGST, and the rule says to set off input CGST, either you have to use output CGST or output IGST. For CGST this SGST cannot be used, and for SGST CGST cannot be used. Now how much input CGST we have? We have 3 lakh. So let's take that value. We have 3 lakh to be set off, but in output CGST we have only 75. So maximum you can take only 75, and if output CGST is not sufficient, we can take it from output IGST if output IGST is available. See here, output IGST is not available, so you cannot take from here, and for CGST you are not authorized to take it from SGST. So maximum of input set off is 75 only possible. So remaining 2,25,000 remains in the input account, that will be set off with the next batch. Now find out the balance. In output IGST nothing is there. In output CGST also it has been utilized. We were not able to completely set off the CGST input, so there is a balance in the CGST input. Okay, then we have output SGST 2 lakh balance. Now at last let's set off this input SGST. How much input SGST we have? We have 3 lakh. For setting off of input SGST, you can use output SGST or output IGST if output SGST is not sufficient and output IGST is available. But in this case, you see, output SGST available is only 2 lakh, but we need to set off 3 lakh. So maximum you can set off 2 lakh as only 2 lakh is available. You cannot utilize CGST even if it is available, but in this case it's not available. But you can utilize IGST if it is available, but here IGST is not available, so you cannot set off using IGST also. So there remains balance in input SGST 1 lakh. So this is how we have to set off input taxes with output taxes. In our particular problem, you don't have any output or CGST's balance. Suppose if there is any balance in any of the output GSTs, that has to be transferred to the government's electronic account, electronic cash ledger account. In our case, we don't have any balance left over, as this output IGST also was not sufficient, output CGST was also not sufficient, output SGST was also not sufficient to meet their respective inputs. So we don't have any output GSTs to be deposited to the government's cash ledger account. But inputs, we still have balance in CGST 2,50,000 that has to be set off with the next batch, and SGST 1 lakh that has to be set off in the next batch. Hope that would be clear. If you have any doubt, let me know your doubts in the comment section, or if you want me to teach any other particular topic, let me know that also in the comment section. Thank you so much for watching. If you have enjoyed it, kindly leave it a like and consider subscribing. Thank you.